Good morning. It's Wednesday, October 12th. I'm Joe Elkier here with Damian White. Welcome back to the Gold Spot. Once again, we wake up this morning, lots of news, no shortage of headlines. We've got mortgage rates back to 2006 levels. Another story I saw coming out, the IMF is warning that the worst is yet to come and look out for 2023. Can you kind of paint the picture for us what's still going to come our way?
Yeah, absolutely. Well, there's really a lot to unwrap when it comes down to that, because what we're looking at is ultimately to one thing, is the Federal Reserve raising rates. That's why mortgage rates are tipping at 7% already. So they've doubled, putting pressure on the housing market. And what ended up happening is the Federal Reserve traditionally would be raising rates above what the core inflation number is. Core inflation right now is 6%. Okay, that takes out food and energy costs. If you add those in, it's when you're about to 8.5% with official government numbers. So those numbers may be higher, but those are the official numbers. Right now, the street is anticipating interest rates coming up to about 4.75%. The Federal Reserve has never stopped raising rates because of inflation until that rate gets above the core rate. That means above 6%. Nothing regarding Wall Street, no investment banks, no other economies or central banks around the world are prepared for something like that. So that really could be, if that comes to fruition, that will give significant pain going forward into 2023. What we're ultimately doing as the Fed raises rates, it's making the dollar stronger, and we're exporting our inflation to the rest of the world. And it's causing a lot of problems. It's causing systemic issues, especially in the poorer countries. I mean, you can't even really compare if you're living on $2 a day and your gasoline prices double and your food prices triple. Well, what are you going to do? It's called riots. So that's basically, in a nutshell, what's happening as the financial conditions tighten and tighten and tighten. And the Fed has told us time and time again that they're not going to stop until they get a handle on inflation. And they've also said specifically, be prepared for pain. Okay, that means layoffs in the job market, businesses tightening up, and pain on the financial, personal, household balance sheet.
So we're seeing lots of things like this coming out. The Bank of England dropped a bombshell on us yesterday, and it really impacted the markets. Can you explain a little bit how that all impacts us?
Sure. So that's exactly what I'm talking about. That is systemic risk. So if you look in the United States, we have the bond market. Germany has the Bund market. Well, in Great Britain, they have the gilt market, which is their treasury bond market. A lot of their pension plans are invested in that. What happened about a week ago was that financial conditions were tightening because of our interest rates and started cracking their system. There was no liquidity in the bond market, which was going to turn it into what they were saying our Lehman Brothers moment. Okay, so when something like that happens, big financial institution or the entire government of Great Britain's bond market collapses, well, then you get systemic problems. And so that's happening right now. The Bank of England is tightening and raising rates like our Fed is, but they had to come in through the back door and actually do quantitative easing and buy bonds at the same time as they're selling them, which is ludicrous, but that's what they're doing to try and hold the market together. We're at a point where something could break in the near term. So everybody buckle up. One thing I will say is that with all these pressures that's coming in and the dollar getting stronger, it's giving buyers in the United States, really only, great opportunities on gold and silver. Gold and silver around the world is trading at all-time highs, not here in the United States. It's giving everybody an opportunity for that last little bit of insurance and protection before the tidal wave comes.
We're here to help. Go to sbcgold.com, request some information, give us a call. We'll see you next week on the Gold Spot.